Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's November the 28th, 2025. And for all our viewers from the US, hope you had a great Thanksgiving and happy shopping on Black Friday and possibly into the weekend as well. It's just me doing the podcast this week. Mo's on holiday. The title for this week's podcast is Did the Bears win Thanksgiving and will the Bulls get Christmas? The title may be a bit misleading if you look at just the weekly price action in the markets, but when you consider the whole month of November, it's a different picture. Looking there at the chart, a lot of those commodities and assets closed higher for the week. So corn up by about 10 cents, soybeans up 13, canola up by 9.6. Hitting 650.7. On the livestock side, hogs and cattle closed higher. In fact, feeder cattle up by about 9.75 at 323.975. On the stock market side, over the prior few weeks, we had been seeing weakness in the stock indices, and we'll get into some of those specifics. This week was a recovery week. In fact, all the indices closed sharply higher. Nasdaq up, S&P 500 and the Dow index also up. Last week we spoke about Bitcoin. Bitcoin recovered this week and went above 90,000 into 91,000 as well. Safe haven asset gold also recovered, or rather continued its recovery, and there was a bit of a breakout as well this week. And we'll get into some of the reasons. And there's a primary catalyst for all of this, and we'll get into that. Let's start with the grains markets and look at the corn chart there. So towards the end, we had that recovery, especially during this week, which has taken it closer to that 200-day moving average. But November was a bit of a disappointment, mostly owing to the much-awaited November crop report, which was a bit of a dud. USDA just wanted to get it out of the way, it seems, and that stalled that recovery and some of that bullish momentum that had been building in the grains markets, not just corn and soybeans and the others as well. But the big question is, what is USDA going to do in the December crop report? Will we get a surprise? Will we get a bullish surprise? Or will they kick the can down the road? Historically, the December report has not been the biggest market mover, but this time around, owing to the reopening after the long government shutdown, they have a lot of catching up to do. Let's see if USDA gives a Christmas gift in the form of a tighter balance sheet, lower yields, etc. High corn demand, which is basically off the charts, and we'll get into some of the latest as far as corn exports are concerned. Also, we had the delayed release of a lot of that government data, including crop progress numbers. This year is the final 2025 USDA crop report, and corn harvest is almost complete. Soybean harvest is complete. Winter wheat planting is at 97% complete. The good to excellent conditions improved versus the prior week is at 48%. And looking ahead, a lot of these crop condition data should be factored into what USDA is likely to report in the December WASDE crop report. And this is as of today. This is the latest USDA weekly exports data that they released, and those big corn numbers, they're definitely helping the demand side of the equation. Decent soybean exports as well, albeit when you look at commitments for 25-26, it is lower by about 38.28% year on year. And corn exports are actually looking like setting another record for 25-26 easily. And this is without Chinese demand. Now that we have a trade truce in place and expectations of greater Chinese demand for U.S. ag, do we see that export program really take off and go into newer highs? As far as soybeans are concerned, which is the bigger commodity under focus, the promise, at least as far as the trade truce is concerned, is that by the end of the year, China would buy about 12 million metric tons of U.S. soybeans. As of now, we stand at 2.971 approximately. So that makes up about a quarter of the requirements. We still have December left. And expectations are for, at least the U.S. rhetoric is that we are still on track to meet that target. This here is the Nasdaq performance well, across all the months, but specifically that highlighted area is for November. And for 2025, it is on track to have its worst November since 2011, owing to the sell-off in AI stocks and in tech in general. But as of this week, a pullback in the stock market was seen, and the Nasdaq today scored its fifth straight day of gains. But as a month as a whole, it was still a losing month. A pullback in the tech stocks have weighed on major averages this month as doubts swirled about the future profitability of AI companies. For the month, Nasdaq fell by about 2%, ending a 7-month win streak. The S&P and Dow were slightly higher, thanks to this week's gains, posting their 7th consecutive winning month. The mood is back to a more of a risk-on sentiment, and that is owing to a recovery, so to say, in expectations of the U.S. Fed cutting rates in their December meeting. So last week, the expectation was that, there was only a 30% chance of them cutting rates, but this week that flipped to about 87% chance. And this is the CME Fed Watch, and this is what I'm talking about. So they're 87, a significant climb in terms of the probability of the U.S. Fed cutting rates come December. Also, guys, don't forget to check out our marketing program and join our marketing club. Make use of the cool app, which should help you with your marketing decisions on the go. This week, we spoke about the December crop basis game plan, and also our view on the cattle market, and an update on what to expect as we go into winter and into 2026. Please try out the program, and we can email those latest reports to you as well. Like I was saying, the expectation for those interest rate cuts by the U.S. Fed has boosted almost all markets. Bitcoin also recovering and being affected by the U.S. Fed rate cut expectations. Like I was saying, it climbed back above 91,000. In fact, the Bitcoin market held long-term support at 80,000, and that's positive for fund flow and sentiment. And there is a knock-on effect among these markets and across these markets. This should help the stock market as well, owing to the correlation between both those markets, and ag as well as we get into December, owing to all the fund flow. And there are expectations among market participants that Bitcoin is likely en route to recovering back to 100,000. This week, Bitcoin continued its rally, rising back to a high of. So this is where it was recently. It climbed to about 93,000 before pulling back a bit. Also, sticking with Bitcoin, on November the 20th, Texas became the first U.S. state to buy Bitcoin for its strategic reserve, acquiring $5 million worth at roughly 87,000 per unit, and this is according to the Texas Blockchain Council. Also, I spoke about gold initially. Gold also there, continuing its recovery and breaking higher, again owing to the expected interest rate cut by the U.S. Fed. Moving on, and last week we spoke about the fertilizer market and how the fertilizer prices have been climbing owing to tight supply, a lot of geopolitics as well. As we look ahead to 2026, fertilizer prices are expected to remain higher or keep climbing. And a lot of the farmers are in the US and in North America are expected to rely on the nutrients that they have available in the soil as of now, and owing to all the applications that they have done in the past, rather than booking heavily forward, owing to the increase in prices. We also spoke about the South American weather situation, and that is another key component of the grain markets as of now. The soybean planting pace in Brazil is slightly behind, but more importantly, that delay in soybean planting, the big question mark is how is that going to affect the second corn crop for Brazil. The GFS has been the most reliable as of now for South America, and that continues to point towards dryness. We are still looking at limited precipitation occurring across southern Brazil, so something to keep an eye out for. As of now, it is still early as far as soybeans are concerned, but again, it's key development stage as far as the new crops are concerned there for South America. Speaking about geopolitics, this week we had headlines regarding a peace deal between Russia and Ukraine, but will it happen before the year end? Ukraine is actually running out of time and money and military might as well, and there's been some wobbles in terms of Western support for Ukraine. And a collapse in the morale within the country as well has been impacting, owing to the much prolonged war that's been going on. The U.S. announced that we are very close to a peace deal, but there still seem to be quite a few question marks regarding that. A meeting between U.S. envoy Steve Witkoff and President Vladimir Putin from Russia is scheduled for next week to discuss the plan. But the ground reality is that Russia still controls about 10% of Ukraine's pre-war territory. And any peace deal would include Ukraine having to give up a lot of their land, including whatever is under Russian command as of now. The chances of a year-end peace deal look to be slim, but Ukraine and Europe are closer to agreeing to a 28-point peace plan, which was what was promoted by the U.S. and also by the recent headlines. Looking at the delayed CFTC data release, and this is the crude oil situation as far as net managed money is concerned. For the first time, we have spec funds going into net short territory in crude oil futures and options. We haven't seen that before, but this is as of mid-October. We still have about a month's worth of data still to be released. The latest for October the 14th, as you can see, there are a lot of red on the screen. Crude oil specifically, that net short position got worse and went into minus 25,085. The live CFTC net managed money situation should be very different from this, owing to the recovery in those markets, especially the ag markets and the grains. Also, Bitcoin should see a recovery as well. That's all I have for this week. Thank you for joining us for this week's podcast. Hope you guys have a great weekend, and catch you guys next week. Bye for now.